All right, let's jump right into this explainer. I want you to go ahead and toss out everything you think you know about where the world's most critical tech hardware actually comes from. Seriously, when we talk about the massive tech boom, AI, or advanced computing, everyone's mind instantly goes to Silicon Valley or those massive foundries in Asia. But today, we're looking at data that paints a completely different picture. We are going to explore the quiet, absolute dominance of the European semiconductor ecosystem. $791 billion. Let that sink in for a second. That is the record-breaking global semiconductor sales figure for 2025. And we're not talking about some optimistic future projection here. This is the reality of the market right now. The world is absolutely starving for processing power, and the sheer financial scale of this demand is just staggering. The European Semiconductors Industry Association, ECIA for short, just reported this massive 26.1% year-over-year jump. So what's actually fueling a surge like that? Well, it's largely being driven by a 42% spike in logic chips and a 35.2% jump in MOS memory. These are the exact fundamental components that are desperately needed to build out data centers and the exploding artificial intelligence infrastructure all over the globe.
So, for this explainer, here is our roadmap. First, we'll map out the 2025 semiconductor boom, then uncover Europe's hidden tech giants, identify the pick and shovel winners, figure out how to spot undervalued stocks, and finally, look ahead to see what it all means.
Okay, Section 1, the 2025 semiconductor boom. Let's map out this surge. You can really see the momentum building in the latest data. The European market specifically grabbed a cool $54.4 billion of that global pie in 2025. That's a 6.2% rise compared to the previous year, heavily propelled by a really strong fourth quarter uptick. In fact, MOS memory in Europe grew by a staggering 35.7%. So the takeaway here is that this massive demand isn't just happening somewhere else. It is driving serious, massive revenue right in the heart of Europe. Moving right along to Section 2, Europe's hidden tech giants. We are going way beyond the usual suspects. Take a look at these numbers compiled from Next PCB. We are definitely not talking about small boutique hardware startups here. These are absolute behemoths. ASML Holding, over in the Netherlands, has a mind-blowing market cap of over $262 billion. Then you've got Medtronic in Ireland, ABB in Switzerland, and semiconductor titans like Infineon and NXP commanding tens of billions in market value. This proves, without a doubt, that European heavyweights completely dominate the top tier of global electronics and supply chains. What's really fascinating is how everyday investors are starting to wake up to this. There's this huge grassroots buzz exploding on places like the Buy from EU Reddit community. People there are actively tracking an incredibly deep bench of specialized European companies. We're talking about Carl Zeiss in Germany making the ultra-precise lithography lenses that ASML needs, ST Microelectronics handling microcontrollers, all the way to Smart Photonics building the first photonic chip test factories. The ecosystem is deep, it's highly specialized, and it is entirely interdependent. That brings us to Section 3, the pick and shovel winners, the companies literally building the machines. You know the old saying, right? In a gold rush, the surest way to get rich is to sell the picks and shovels. Well, on one side of this tech gold rush, you have ASML. They are the sole global supplier of extreme ultraviolet, or EUV, lithography machines. You literally cannot make advanced chips without them, period. But on the other side, you can't assemble those chips without a company like BE Semiconductor Industries or BESI. They control nearly 40% of the global die bonder market. These two are the ultimate pick and shovel plays. The entire global tech economy basically runs straight through their highly specialized machinery. All right, Section 4, finding undervalued European stocks. Let's see what the Simply Wall Street data tells us. 18.2%. That's not just a random metric. According to cash flow analysis, this is BESI's estimated discount to its fair value right now. Think about that. Despite being a completely critical pillar in global chip assembly, the broader market just hasn't fully priced in their actual tangible worth. So breaking that down into euros using this Simply Wall Street data, BESI is currently trading around 133 euros and 75 cents. But based on future cash flows, its estimated fair value is calculated up at 163 euros and 46 cents. It is trading nearly 30 euros below its fair value. And get this is happening while the company is running a massive share buyback program, and analysts are forecasting a 28.4% annual earnings growth over the next 3 years. It's the textbook definition of a giant hiding in plain sight. And listen to this. the discounts get even wilder when we look just slightly outside of pure semiconductors into adjacent high-tech European sectors. Think aerospace and defense, which rely heavily on these exact same advanced chips to modernize. Take Rheinmetall, the massive German defense contractor. They just locked down a 1.7 billion euro space-based reconnaissance data contract with the German armed forces. Obviously, their tech and data processing relies completely on advanced electronics, yet they are sitting at a surprising 35.3% discount. They're trading at 156 euros against an estimated fair value well north of 2,400 euros. And it's not just defense. Look at an absolute titan like Airbus. Let's face it, they're doing a lot more than just giving out peanuts at 30,000 feet. They just reported a net income jump to 2.64 billion euros for the first 9 months of the year, all driven by incredible aerospace engineering and advanced tech systems. Yet, they are trading at 198.40 euros, nearly a 30% discount to their estimated fair value of roughly 282 euros. The market seems to be routinely and heavily discounting European companies that have massive cash flows and high-tech manufacturing dominance. Finally, Section 5. Looking ahead. Let's connect all these dots.
We've basically just walked through what I like to call the macro to micro strategy. We started way up high with the macro reality, a record-breaking $791 billion global semiconductor boom. But instead of chasing the obvious overhyped consumer tech brands, we tracked that money straight down to the micro level, down to the specific, often undervalued regional suppliers in Europe that are making that boom physically possible. The big takeaway here is that the data center and AI revolution isn't just an American story, and it isn't just an Asian story. Foundationally, it relies entirely on European engineering, lithography, and packaging machinery.
So, as we wrap up this explainer, I really want to leave you with this one thought. With global semiconductor sales smashing all-time records and absolutely vital, irreplaceable European supply chain companies trading at 20 to 30% below their fair value, you've got to ask yourself, are you overlooking the quiet giants of Europe? Is your understanding of the global tech boom missing a massive piece of the puzzle? I'd encourage you to look closely at the data and ask yourself if there's a European advantage you might just be missing out on. Thanks for hanging out with me for this explainer.